I'm Jim Cramer, and welcome to my world.
You need to get in the game.
They're going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere. And I promise
Mad money. You can't afford to miss it. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC. Sometimes stocks seem to make no sense, exploding upwards, regardless of the market or the latest news. Take today, where the Dow sank 17 points. S&P gave up 0.04%. NASDAQ lost 0.13%. Subdued day. Overtones of Greece. Worries about a market that's run too far too fast. But then we also saw some bizarre moves in a couple of stocks. Bizarre move in Green Mountain Coffee. Bizarre move in Netflix. Whirlpool. All screaming higher, seemingly without limit, skyrockets. What the heck is going on with these stocks? Why aren't they marching to the market's tune? Isn't that what happened in 2011? All the stocks kind of do one thing at the same time? Each one of these has its own story. Each is going up irrespective of the Dow or the S&P. But they all have one thing in common. There are no sellers to speak of. There's no supply to be had, at least not yet at these levels. Let me do something different tonight, something you never heard of. Let me explain how these moves happen. I'm going to use my knowledge of institutional trading, meaning buying and selling big blocks of stock, because that's the only way this makes sense. See, unless you traded huge blocks of stock yourself, meaning 100,000 shares at a time or more, I gotta tell you, you have no idea what's behind these seemingly nutty moves today. I know you didn't, because I didn't understand how things worked until I found myself handling orders on the desk at Goldman Sachs. In fact, I had no idea how stocks moved up or down at all. Before I got to Goldman, I never bought more than a couple hundred shares at a time. Put a market order in, get the report, bought it pretty much where you wanted it. Simple. You couldn't move a stock up or down if your life depended on it with those size orders. Oh boy, but when I got to the trading desk, that trading desk at Goldman, my first day, I helped handle an order. Okay, I answered the phone, where a client wanted to buy 1 million shares of Diamond Shamrock, at that time a major oil company. Buy me 1 million shares of Diamond Shamrock, 27 top. 27 top. 1 million shares, 27 top. I hit the stock up. It was trading at 26. What the heck did he want to buy it at 27 for? Why not just buy it at 26 where it was offered? I mean, what a stooge. I mean, this guy's a stooge. So I turned to the real trader, as opposed to me, a total poser. I say, hey, Eddie, guy wants to buy 1 million shares of Diamond Shamrock. He wants to pay 27. Eddie looked at me like I was a total moron, which I was. He was furious. I think he would have thrown the phone at me if it weren't tethered to a desk. You such and such and so. Well, you know, get the point. First, it's not called buying, it's called taking. And second, he doesn't want to pay 27 for the stock. That's his top. That's what he's willing to pay if he has to. So I asked Eddie, because I'm really stupid as plywood, Orient strand board, why does he want to overpay when the stock's at 26? He explained to me something I never forgot. Bozo, he said, because indeed I wore my hair even more like Bozo then than I do now. That $26 price is good only for retail, for a couple thousand shares. If you want enough supply to get 1 million shares in, you're going to move the stock. And he doesn't want to pay more than $1 above. He doesn't want to pay more than 27 when he moves it with his own buying. That's how stocks move. They move because people move them. They move until they trade to what's known as supply. If there's no supply, meaning no one's willing to sell at this level, then the buyers move them up even more to where supply can be found. And that's what's behind these big moves today. So let's go over Whirlpool. You may have seen the stock take off like a rocket to $55, where it was when it reported its first good quarter in ages last week. It's up another $2 today, 71 and change. You're thinking, wait a second, I don't care how good that quarter could have been that good. 16 points in 4 days, it's still not that good. What's that about? All right. First, there are only 76 million shares of Whirlpool. All right, that sounds like a lot of shares, but it isn't. Exxon has 4.7 billion shares. Pfizer, 7.7. Microsoft has 8.4 billion shares. So even though Whirlpool has a market cap of over 5 billion, its share count is like a small capitalization stock compared to Exxon. Now, because Whirlpool had been such a serial underperformer, stinking up the joint quarter after quarter, the stock became a target of the short sellers, people who bet against stocks. How could it not? The company has ultimately complained about lower housing. Listen to these alibis. Oh, we didn't do what lower housing started. Oh, too much inventory. Oh, foreign dumping. Oh, soaring raw costs. Nothing good ever seemed to be happening here to this Job-like company. And there was even talk that the dividend would be cut this time around. So going into the quarter, 10% of Whirlpool's shares were sold short. Huge percent of people thought this thing was going to blow up. But unlike all the previous quarters, this time Whirlpool delivered a knockout punch to the shorts. It delivered big time. Plus, they got it higher, totally fooling the sell-side analysts from the brokerages who had to radically raise their estimates. Went from this to this. Now, put yourself in the heads of Whirlpool's shareholders. If they hadn't been shaken out by this company's multiple misses by this time, they weren't going to sell at all, right? They're like in through thick and thin. They had taken a ton of abuse. They weren't going to be dislodged at this point. They finally got what they wanted. But the short sellers, boy, did they get it wrong. They got it way wrong. So let's say a bunch of them were short. Say each 100,000 shares apiece, okay? They can't just go to their broker and place an order and expect to get a report right around the close of the last sale. They have to go to guys like me when I was on the Goldman desk and try desperately to get that order filled, meaning they need to pay up to cover their short positions. So here's the dog. Kramer, I got 100,000 Whirlpool to buy. Last sale 55. Take a 56 top. Keep in mind, many of the other short sellers are at the same time doing these. Hey, Johnson, get me 100,000 in. 56 top. It's the same thing all over the street. They're trying to contain the loss, contain their short sale loss, trying to cover it, bring it in. All over the street, brokers are getting that exact same call. I would immediately reach for whatever stock was out there. So would everyone else. Next thing you know, the stock's at 56, then 57, then 58. As real buyers come in, as well as short covers, real buyers are in shit too because suddenly the dividend's fine, the company's doing better, housing's coming back. What happens then? Oh, boy, you got to go back to your buyer. And you say, look, I'm looking for sellers here, but I can't find any supply. There's none to speak of in the 50s. 50s? It's a 50s, but you got to be... Nothing. Now the desperate buyer says, do what you can. And you reply, I need a new top. The buyer's shaking. You can hear it in his voice. They're just shaking. They're like, okay, 61 top, 61 top. And I might then go over my system. In other words, go out loud throughout the whole Goldman Sachs organization, asking people, call your clients, see if anyone has any Whirlpool for sale. When people hear they're big buyers, funny thing, they don't want to sell either. So with the 61 top, we run into the same problem. We had tons of buyers there. No supply to sate them. Now the stock starts really getting away from the buyer. He's fast. Just take it to where the supply is. Get it in. Next thing you know, Whirlpool's at 71. We're traded today. Right now, that same thing's happening all over the street on a bunch of stocks on Green Mountain. On Netflix. Because these, like Whirlpool, have become serial disappointers. They're annuity shorts that suddenly surprise to the upside. There are multiple buyers of all three. All trying to get stock, but no supply is available. Buyers have come back day after day, and they still can't find shares, so they pay up even more. You cannot fathom these moves if you're only thinking in terms of home gamers buying a couple hundred shares. These situations are what happens when investors turn swiftly from bear to bull on better-than-expected news. They're called short squeezes because there isn't enough stock to satisfy the natural buyers and the many short covers. You could say these buyers just punch flip-floppers, but believe me, in all three, they're fighting to save their firm's lives. When the moves ends, that's the great mystery of trading. We all want to be able to say Whirlpool will only go to 80. Netflix stops at 140, but it's not like that. The bottom line, when you get a short squeeze, it's where she stops, nobody knows, except the buyers themselves, who just won't quit until they brought their short positions in, because they were wrong, and thus no longer have any edge. In other words, these moves have nothing to do with valuations, earnings, storage, nothing, nada. They are just a question of supply and demand. And as of today, the short covering buyers still haven't found enough supply to end their agony. Maybe tomorrow will be a better day. Rhonda in Texas, Rhonda!
Hey, Jim, a sunny Texas booyah to ya today.
Always like that. What's going on?
Hey, Jim, I love your ARG principles. So on today's announcement from Coinstar partnering with Verizon, does that mean a good upside for both of them?
Well, we got more than that. We got good earnings, Coinstar. We got a tie-up with NCR, competitor Coinstar. And we have exactly what I'm talking about with these other stocks. We got a genuine short squeeze. There is no supply. Coinstar up 8. This stock has the ability to be up 12 tomorrow. That's right, 12 points before I think you'll find any supply. Don't get caught short. Understand the market. Right now, it's a matter of supply and demand. And today, the shorts just don't have enough supply to fill their orders. Are the companies doing better? It doesn't matter. They have money. Be right back.